name now with Tim Bigham, option strategist, Pilot AI. Tim, Nvidia's had a good run of late. We're up today off the back of this news. Still a lot of questions around, obviously, these developments. But, I mean, how would you approach this for example purposes?
Yeah, absolutely, Sam. And I would approach it somewhat cautiously here, given that recent kind of red-hot rally off the lows that you alluded to just a few sentences ago here, as Kathy Wood and the like took advantage of kind of that stock briefly below the 200 level. So that's kind of where I'm positioning to be a buyer and getting paid for it here with a put credit spread out in September. You get a little bit of that earnings sort of, Ivy, a little more premium going, past the earnings date, but enough time beyond the earnings date where if you get a knee-jerk reaction, you don't get in trouble. So I'm just going out selling the traditional September 195, 190 put spread for around 75 cents or so. Like the return on risk here of over 17%. Plus well over a 20 point and over a 10% downside cushion. So even if we get that pullback that may happen in Nvidia, I think the news here kind of puts a floor in the stock. I wouldn't be an aggressive buyer here. Valuations are cheaper, but certainly still not cheap on Nvidia. So I will wait and get paid for my waiting with this put credit spread.
Speaking of waiting, I mean, markets feel like they're holding their breath the last two sessions ahead of this CPI report. Quick thought for us, Tim?
Yeah, I think that will continue going forward here. We're seeing, valuations finally coming down, interest rates not. We're getting to the end of earnings season, so I think we'll continue this sideways slog, I call it, especially because seasonality points to this being the most difficult kind of 6-week stretch historically in markets.
All right. Thanks so much for that. As always, Tim Bigham, options strategist over at Pilot AI.